This entire sector is about to explode. Kevin O'Leary. How often have you recently heard of cryptocurrency, Bitcoin, and other such innovations? The recent past has witnessed an increase in the number of people investing their money in stock markets. How far can we trust these cryptocurrencies? Let's take a look at what Kevin O'Leary said about the cryptocurrencies and how they'll change each of our lives in the future. Kevin O'Leary, a Canadian businessman, entrepreneur, author, and politician, says that the crypto, Bitcoin, will be securing its position as the 12th sector of the S&P 500. This prediction depicts that there's a good scope for cryptos in the future, and those who have invested already in it will be benefited from it when they'll make its name into the S&P list. Some of the other current slices of S&P include information technology, healthcare, financials, and energy. Analysts say that the value of the global crypto market will be tripling by the year of the 2030s. No matter how much we resist getting along with crypto, investors, brands, and businesses will be hugely benefited from this sort. How is crypto a decentralized system? We know that currently there's no requirement for an intervention by a third party like a bank or government in crypto. You get to be the primary decision maker. Such a system is known as a decentralized system and is utilized in blockchain technology. Since regulation is absent in the mass institutional adoption of Bitcoin and other assets, people as a whole still consider this a form of gambling or as something illegal. Pros of investing early. Kevin O'Leary also says that if you're an early investor and when the government comes up with wonderful policies, then you'll be a leading investor in the near reality. People will be hustling to invest as it will be more on the trendy side then. Initially, when crypto was introduced, people were skeptical about it, wondering how reliable is digital money. But now with time, cryptocurrencies have become common just like traditional money transfers. Currently, the demand for cryptocurrency is pretty low as compared to the impact it'll make in the future. Hence, if we invest early, we'll be benefited by getting back a huge amount. Signs why crypto will conquer the future. President Joe Biden has signed a new executive order on crypto and other digital assets. In this order, he has asked financial agencies to bring up plans and strategies that can regulate digital money platforms. This indeed is seen as a piece of positive news for crypto enthusiasts. Reports say that this is essential for further growth of crypto markets. Also, it'll ease its access to institutional investors. More clarity will be brought, and hence it would be more trustworthy. For long-term investors, this would ensure stability as crypto markets have remained volatile for a long time until now. U.S. Senator Cynthia Lummis offered a bipartisan bill at the Bitcoin 2022 meeting. Lummis emphasized that the bill will revolve around the regulation of digital money innovations like Bitcoin, Ethereum, etc. It will include consumer protection elements, taxes regarding crypto, and privacy components. This was a very positive gesture in the history of cryptocurrency, which indeed implies how cryptocurrency and digital money will be ruling the world soon in no time. Cryptocurrencies are usually displayed in the form of coins, which we refer to as stable coins. There are various types of cryptocurrencies available in the market now. Some of the famous forms of crypto are Bitcoin, BTC, Ethereum, ETH, Binance Coin, BNB, Tether, USDT. United States Senator Bill Hagerty brought a lot more transparency by passing the Stablecoin Transparency Act. As the name suggests, it has brought a lot more clarity to the crypto stream about the constitution of a stablecoin. What is cryptocurrency/Bitcoin mining? There are a lot of pros and cons related to cryptocurrency mining. Even though there's a lot of potential in cryptocurrency for the future markets, there are many disadvantages to looking at it. One such is Bitcoin mining. The term mining refers to creating new Bitcoins that can enter the chain. This process is done by decoding extremely difficult computational math problems and using advanced hardware. One of the main cons of Bitcoin mining is that it demands a huge amount of energy. According to Cambridge, it's estimated that 8 to 15 gigawatts of continuous power are utilized for Bitcoin mining. A single Bitcoin mining asks for machines that must be fed with 150 kilowatts of power. In simple words, that's the amount of energy required to power about 170 average homes in the United States of America for about a month. This is a major drawback of Bitcoin mining. However, there's a ray of hope for the investing folks. Bitcoin and crypto can be mined using sustainable energy resources as well. Renewable energy sources have a large role to play in this. In the last 2 decades, a huge number of people have shifted their energy sources into renewable energy sources. Hydro, electricity, solar plants, thermal power plants, and wind turbines have contributed tremendously by lessening the carbon footprint across the globe. Similarly, such a practice can be brought to use in the case of Bitcoin and cryptocurrency mining as well. Kevin O'Leary says that within the next decade, we'll be able to mine Bitcoins that are 100% ethical and clear from greenhouse gases. Is investing in cryptocurrency beneficial? Many people ask if the crypto investment is beneficial or not. Here's my answer. Cryptocurrency can be a very good investment if you're willing to accept it as a high-risk gamble, which could pay off, but also on the other side, there's a strong chance that you could lose all your money. So before you go and buy and sell digital currency, know the risks so that you can judge if investing in it is a good idea for you and your finances. Is cryptocurrency a good way to make money? Early investors in cryptocurrency like Bitcoin will likely have made money. If you had invested £310 to buy 1 Bitcoin in April 2016, after 5 years, your investment would be worth £35,000. As we all know, Bitcoin's price rose through 2021 by reaching record highs of just £44,000 in November, but also dropped to £27,000 at its lowest in 2022. So it's not always safe and can change the waves at any time. That's certainly not worth more than £310 for 1 Bitcoin. It shows how the most popular cryptocurrency in the world can be volatile. Few of the world's biggest cryptocurrency exchanges are listed on Main Street stock exchanges. San Francisco's Coinbase debuted on the US Nasdaq stock market in April 2021 with the value of over $100 billion, that's 700 billion pounds, making its market cap more than twice that of Barclays Bank. On the 15th of February 2022, the value had fallen to $41.86 billion. New cryptocurrencies, which are using blockchain technology, are coming out all the time. Some of them are intended to replace traditional currencies such as dollars, while others are used to create new types of financial applications or swap value between various digital currencies. So if you're considering buying into digital assets, look closely at projects individually to see how they might pan out in the coming years. What are average returns for cryptocurrencies? To let you know that there's no guarantee a cryptocurrency will remain in action in the long run, for example, of the top 10 currencies by market value in 2013, only 7 are still functioning to date. In 2013, 1 Bitcoin was just under $112 and had a total market value of just over $1.2 billion. On the 15th of February 2022, 1 Bitcoin was worth about $44,192 and has a total market value of $836.38 billion. 8 years ago, 1 Bitcoin was worth $3.38, but in April 2021, it commanded a value of about $245 per coin. Now it's worth $130.70. Novacoin, Devcoin, and CHN Coin are no longer listed by CoinMarketCap, while 2 of the 10, Terrain and Friction, have fallen in value in the intervening time. The Terrain is not worth about half what it was in 2013. This means buying smaller coins and holding on to them as a long-term investment is not necessarily going to make anyone any real money. There's a constant stream of new cryptocurrencies entering the market, and Doge is just one recent example that has started to take off. Is Bitcoin a good inflation hedge? Bitcoin is an effective hedge against inflation. Due to limited supply and decentralization, it gives a hedge. These factors bring in resilience, power, and scarcity. Limited supply, bringing scarcity. The supply of Bitcoin has been algorithmically capped to 21 million coins. By the end of 2021, 18.77 million BTC have come into circulation. As we know, inflation happens when the state or the central bank keeps printing currency notes excessively, resulting in an excess of supply of money. According to economic theory, inflation occurs when the money supply increases faster than the real output of goods or services. Preset limits on Bitcoin in circulation means no excess supply, keeping inflation in check. The digital coin's annual rate of mining dips by 50% roughly every 4 years. Taking into account the current supply schedule of Bitcoin's annual rate of production will be approximately half of gold's and will continue to go down, making it more scarce than the metal and driving up its current value. Decentralization, powering resilience. The decentralized structure of Bitcoin takes out the control of a centralized authority. With thousands of nodes functioning across the globe, the network is optimally resistant to external attacks that have chances to alter its monetary policy, which might put the inherent scarcity of the digital coin at risk. Bitcoin, however, is immune to such factors as there are no leaders to influence and no executive committee to bribe. Satoshi Nakamoto, its founder, has remained pseudonymous since Bitcoin came into being, and it's observed that Bitcoin remains a unique digital asset for having a super successful track record in the absence of influential leadership. Because of extensive decentralization, cryptocurrencies cannot be double spent, and it has also helped distribute coins and help Bitcoin to survive numerous challenges. It has helped Bitcoin prevent decentralized control over information, which enables all coin holders the ability to participate in decision-making. When businesses with interest in Bitcoin attempted to change the block size to allow more transactions per block, individual node operators and developers opposed the proposal intensely. Thanks for watching. We'll catch you in the next one.